Hey guys, welcome back to Smart Trader. This is Diaspol and thank you so much for all your love and all your support. If you're a new viewer, then watch all our videos and recent videos. So if you're not watched that, just go through. So if you're liking and if you think it's going to benefit you, then you can hit the subscribe button to be a part of this big Smart Trader family. So in this particular video, we are going to discuss about short selling. So a lot of beginners out there do not know this concept of short selling, or they would have not come across with this concept or would have not thought about this. So this video is especially for all the beginners who watch my live trading videos, because we talk directly the overview of terms and you don't get the exact meaning of what I say. So I'm breaking down each and every meaning of every terms in stock market and investing, so that you guys get stronger in terms of your theory, so that when you see my practicals, you understand it in a better way. So short selling. So short selling is a very common word used by traders, and most of the traders do short selling. So I will tell you what exactly is short selling and what are the multiple ways you can short sell and make money in the market. So all the videos of Smart Trader is for educational purpose only. So try to take this for educational purpose. Do not try to invest with whatever you learn from Smart Trader channel. Try to check with your investment advisors before investment. So short selling is nothing but sell first and buy later. Yes, it's as simple as that to say for me, but I'll try to make you understand in a very simple way. So what do I mean by sell first and buy later? For that, I will give you a small example so that you get a better idea. So imagine onions. Okay, so if I'm telling you to go buy onions, okay, and then go and sell onions, it's a normal thing. Anybody can go and buy an onion and sell an onion. So that's a common routine in every business. But what if I say first sell the onions and later go and buy the onions? Now you will have a question mark asking, how can I sell an onion when I don't have an onion with me? Because normally what do we do? Traditionally we go buy things and then we sell them. Only if we have it we can sell. But how can I sell first and then do buying later, and that to make money out of it? So this is the big questions you guys would have. So this can be done definitely in our stock market. So we have the opportunity to do this particular type of transaction. We can do selling first and later then do some buy and make some profit or loss happens, but end of the day you can do this options, which we cannot do in real life. We cannot buy, we cannot sell first the onions and then later say I will buy the onions. So people think we are mad. But in stock market we have the special concept. So it is very important for you to understand this basics. So before we see how we can do that, first of all, what is the motivation to sell first? Okay, what is this actual concept about? So I will directly go to the stock market. Imagine there is a company whose stock price is 1000 rupees. See, just like onion, let's say onion is 100 rupees. There is a stock which is 1000 rupees. Okay, and you feel that there is something wrong going on in that company, or some bad news is going to come, and according to you the company is going to do bad, so it may fall to 800 rupees one day as per stock market. But you know that something wrong is going to happen with this company, or some bad news have started coming in this company, so the business may go down in this company, or because of COVID the company is not doing well and their earnings may go down. So you know that there's an opportunity of 1000 rupees stock will fall to 800 rupees. So this is where you can do sell first and then buy later. There's a difference of 200 rupees. So this 200 rupees will become your profit in case you sell at 1000 and buy at 800 rupees. Okay, it's just that we cannot do it. But imagine onions. You have onions and onions price is 100 rupees. And some prediction next week there's something wrong going on happen and onion price is going to fall to 80 rupees. Okay, it's gonna fall. So therefore you will sell this in a prediction that you know that the onion is gonna fall and buy it later. But actually in reality you can't do this, but in reality you can do in stock market. So that's the only motivation. When you know there is something gonna happen, just like see for example onion prices let's say 100 rupees, and you know there is some problem gonna because of rainy season there is no much onions out there, everything is spoiled and all those. So the price is gonna go to 120 rupees. So what you will do, you will buy and you will try to buy the onions now, and as soon as the next week price go up, you will sell your onions at 120 rupees, or 20 rupees profit you will do. Same thing in stock market also. You buy at 1000 rupees stock, and when the stock goes to 1200 rupees, you make 200 rupees profit. Same thing when the market is falling, the stock is falling, you can sell the stock. So that is one big advantage which is there in stock market. So let's take an example over here. So I have three options. One is idea and this is idea futures. For the beginners who don't know, try to connect it later part, but I'll just give you for the ones who know a little bit of stock market and who doesn't know. So this is idea equity, this is idea October futures, that is future. I just take a random example, and this is nothing but idea options. Okay, your options. This is future and this is your equity. So idea equity, whatever you're seeing is, this is a idea company, you know. Now we have Vodafone Idea together and all those, and there's something wrong happening with them and the stock is falling. So if I open the chart of idea, so you can see that on a 1-day candle, if I zoom out, so you can see that how drastically it has fallen because of some bad news happening and no customers and competition of Jio and all those. So Jio, Idea and Vodafone now completely is down, and Idea, if you see the stock price has come to 9 rupees somewhere from 60 rupees or more than that before that. So there's an expectation that there's going to be a fall over here. Same thing with something good, this is something bad. So you predicted it's gonna fall, or the business is going to be bad, and you predicted it, let's say somewhere here itself at, let's say 30 rupees you predicted, and today it is around 10 rupees. So there was a 20 rupees potential for you guys. Okay, so this is the opportunity what I'm trying to talk about over here. So by selling here at 30 rupees and buying at 10 rupees, okay, so buying at 10 rupees, selling at 30 rupees, so you made a profit of 20 rupees. This is the concept of short selling in real trading. And in which areas can we do multiple ways of short selling? So one is in equity. Now you need to understand few concepts here. So okay, so in equity you can do buying and selling, that is common thing. But if you want to do selling, you have to do intraday. Intraday means buying on the same day and selling on the same day is called intraday. So selling and buying on the same day will become intraday. So anything positions you close on, buy on the same day and sell, or closing the position, buy and sell on the same day, it is called intraday. But in terms of selling, you cannot hold your positions. Okay, so don't get confused. I will not confuse you guys. But in intraday you can do. In equity, you cannot sell for the next day and hold, like you cannot sell here and then wait for a month and then buy it. You cannot do all those in equity. Remember that. Okay, but in terms of futures, okay, you can do that. You can sell, whether it is intraday you can sell, or if it is overnight position also you can sell. So this is a very important concept. Most of them don't know. They think, okay, in equity we cannot sell and hold for tomorrow, but so that we cannot do in anything. No, in futures, that's the reason you see a lot of people trade in futures. They short their position and then they book their position after 10, 15, 20 days within expiry, or they roll over to the next month, they continue their profits when it is falling. So you can still do selling in futures. You cannot more than 1 day overnight, but in equity you cannot do more than 1 day. So only in intraday you can do, and for CNC you cannot do in equity. But in futures you can do intraday, you can do in normal order or CNC, whatever we call it. Here it is called normal order, overnight positions. So here you can do selling and you can hold it for tomorrow, day after tomorrow, no problem. Same way with options also, you can sell and hold it for longer period. So it's also very simple. The normal thing, just like a futures, you have a normal order, you can sell and you can hold your position, just that you need a little bit more money to do that. Okay, so now the possibilities. So you know that how you can sell from the top, and when it goes down you can book your profit and all that, you know that. So what are the possibilities? You see at any chart of this idea, it keeps falling. Okay, let's see futures. Futures, you know, there is expiry of future, it will close down, next month will open. But see the movements, a lot of downfall is common here. Let's see the options. In option also, the premium, you know, the 1 rupee, 2 rupee, whatever the premium is, you see the chances of green and the chances of red. The red is more. Okay, you see here everywhere 1, 2, 3, 4, 5, 6. The chances of red is comparatively more in most of the stock, because the reason being, see, we are affected by external news, internal news. Anything happens, any war happens, any fight happens, any tweet happens, any bad news comes, everything will impact the market and stocks and the companies related to it. So the amount of good news coming is like some new business came, earnings came, these are very less if you see the numbers, but bad news are more. So that's the reason you see the opportunity towards short selling is higher compared to buying side. Market going or stock going upside, falling is more, the number of days is more. So short selling has high chances, and that's the reason you see a lot of traders are having more motivation towards short selling. So that is one of the reasons. So you can also take a paper and pen and just do a back data with 1 day candle and see how many days red candles are there and how many days the green candles are there. Red will be more. Now the thing is, which stock to short is very important. Okay, so when you're shorting, ensure the stock which you're taking is not fundamentally strong. Fundamentally means the company is doing very good. The reason why I say is, if the company is doing very good, you do a sell, by miss someday it reverses and it keeps going up, you'll make a big loss, right? So take a stock which is not doing that great. Okay, for example, like Idea fell and all those, S Bank, a stock which is not doing that great, and shorting on those stocks will be more better, because already the company is doing bad, and any one more bad news comes, the stock will fall further. So keep this one tip in your mind. Short selling on a normal company, a normal performing company is good, rather than doing on a exceptionally doing famous companies. Famous companies, like they're doing really good. You know the news that, okay, for example, Reliance is getting so much opportunities. Going and shorting Reliance will be a bad example right now, right? So based on the situation, see the company and then doing shorting on them will make more sense than doing on better stocks. So this was more about short selling. Okay, I just gave a basic overview in the starting, and I just showed you how to utilize in equity, future and option. These are three options, and in options and futures you can do tomorrow, day after tomorrow, you can carry forward, but in equity you cannot sell and hold it for more than a day. Same day you have to close your position. So be very careful, don't do that mistakes. Okay, so hope this was an add-on to your knowledge. This is only for an educational purpose only, not for investment. Don't go tomorrow blindly sell Idea just because I said Idea is not doing good. Now what if Idea is doing a good job and it goes up? So be mindful, do your research, or reach out to your investment advisor before investment, but before that, keep learning. So thank you so much for watching this video. Please do hit that like and subscribe. See you soon in my next video. Till then, take care. Bye bye.